Good morning, good afternoon, and good evening, everyone. Welcome to our webinar on effective scaling of AI in insurance operations. We will explore how to move beyond isolated experiments to truly embed AI across your entire enterprise. We will also cover the impact of AI scalability, challenges that it brings, and key points to focus on while operationalizing AI. Let's dive straight in. Insurance has always been a data driven industry. Long before artificial intelligence became a mainstream business priority, insurers relied on actuarial science, statistical modeling, analysis, and risk based decision making to manage underwriting, claims, fraud detection, and pricing. It's not introducing data intelligence into insurance for the first time. What AI changes is the scale, speed, and operational reach of that intelligence. The insurance industry is currently in a transitional phase where organizations are moving from AI experimentation to operationalization. This evolution is key to unlocking new levels of efficiency and insights. So, let's look at what the journey typically entails. As we all know, over the last several years, insurers have launched AI pilots across many workflows in claims processing, fraud analytics, underwriting support, workflow automation, customer servicing, you name it. An AI pilot has been done in that particular area. However, while the pilot activity is widespread, true enterprise scale AI deployments remains limited. Most insurers still operate in fragmented environments where AI exists in isolated business functions rather than integrated enterprise capability. If we think of AI maturity levels, there are three levels of AI maturity broadly visible across the insurance market today. The first group includes insurers who are still experimenting with proof of concept and vendor led pilots. The second group includes insurers that have moved selected AI use cases into production environments, such as claims triage, underwriting recommendations, fraud detections, etc. And the third group includes insurers attempting enterprise scale deployment through centralized governance frameworks, enterprise data pipelines, model monitoring systems, and cross functional operating structures. However, getting to level 3 isn't without its challenges. In this webinar, I would like to cover the key points to focus on when scaling your AI investments enterprise wide. Today, AI is proliferating in every insurance operation and benefiting so many workflows. It brings tremendous operational efficiency in claims, underwriting, customer servicing, and policy administration workflows. It helps by automating repetitive tasks, accelerating document processing, and reducing operational friction. In terms of loss ratio management, AI supports improved underwriting precision, anomaly detection, fraud identification, and data driven pricing decisions. It has also transformed customer experience. AI is helping insurance companies to provide their customers with fast, digital first, real time interactions similar to banking and e commerce platforms. And in the area of regulatory responsiveness, AI is increasingly supporting compliance monitoring, audit readiness, and operational reporting. At the same time, regulators are also focusing on AI governance to make its use responsible. Institutions such as IRDAI, NAIC, and OECD have already issued frameworks and guidance related to AI governance, transparency, data management, and responsible technology deployment. Most insurers have found tremendous results on their proof of concept projects. These early initiatives typically focused on isolated use cases such as automating specific tasks or developing predictive models for niche problems. While these proof of concept projects were valuable in demonstrating potential, transition to full scale operationalization across the enterprise showed significant challenges. If you think about it, pilots operate under controlled conditions with clean data, dedicated resources, and simplified workflows, whereas enterprise environments are far more complex. At scale, insurance companies face fragmented legacy systems, inconsistent data quality, operational resistance, audit requirements, compliance obligations, and cross functional coordination challenges between business and data teams. As a result, the largest barriers to AI scaling are often organizational rather than technological. And the journey from promising pilot to fully operational enterprise wide AI workflow requires a significant strategic shift. Instead of mere technological adoption, it requires comprehensive rewiring of business processes, organizational structures, and data ecosystems. The insurance industry has already passed the point where AI adoption is optional. The real competitive differentiator now lies in how effectively insurance companies can scale, govern, operationalize, and integrate AI into their enterprise workflows. Scaling of AI projects across various insurance workflows can yield substantial ROI by optimizing operations, enhancing accuracy, and fostering innovation. While many insurance companies initiate AI pilots, only a small percentage can successfully scale these initiatives across their organizations. And those that do unlock significant value across core domains such as claims, underwriting, fraud detection, security, governance, wherever they are using the AI. Here, I would like to show how AI is reshaping insurance workflows when the deployments move from isolated pilots to enterprise scale operational systems. I would also like to show how scaling AI changes workflow complexity, governance requirements, infrastructure demands, and operational accountability. Claims processing is currently the most mature and visible area of AI deployment. AI is being used across the claims lifecycle, including FNOL, document extraction, triage and routing, reserving support, and settlement processing. NLP and document intelligence systems help extract information from paragraphs, medical records, repair estimates, and claim forms. AI also supports faster routing of claims between fast track processing and specialist review workflows. There is an example of large insurance company handling nearly 50,000 claims related communications daily, utilizing tailored versions of LLMs to draft most messages to claimants. These models are trained on company specific language and guidelines, and human agents are reviewing outputs for accuracy. When it comes to enterprise scale claims AI, there are so many complexities which are rarely visible during pilot phases. For example, multiple product lines, inconsistent claims formats, regional variations, and highly fragmented data quality. To operationalize AI at a scale in claim workflows, you will require audit trails, appeals management, compliance logging, and integration with legacy claim systems. And so, ROI cannot be measured only through claims processing time reduction. You must also measure for less adjustment expenses, dispute management, audit readiness, quality assurance, and operational consistency. Underwriting is another major area of AI adoption. but it creates significantly higher governance sensitivity because it directly affects pricing and risk selection decisions. AI is increasingly used for risk enrichment, submission triage, telematics integration, geospatial analysis, and pricing recommendations. However, full scale operationalizing in the underwriting operations create explainability challenges. It's because regulators, auditors, and policyholders increasingly expect insurance to justify how decisions are being made. If I talk about benefits, some automotive insurers are already employing Gen AI to analyze real time driver data for automatic insurance pricing based on actual driving behavior. This approach has led to significant reductions in operational costs and it has improved application performances. It has also resulted in higher profitability and potentially lower premiums for customers as well. I would like to stress that AI in underwriting is as much a governance issue as a technical issue. Model validation, fairness testing, explainability, bias monitoring, and regulatory documentation. All these has become essential components of AI operations in underwriting functions. Black box models would create operational risk here because insurance companies may struggle to justify adverse underwriting outcomes during audits and regulatory reviews. Fraud detection is another area where scaling of AI can bring substantial returns. AI can identify anomalies, suspicious behavior, and network patterns across claims datasets that human investigators may struggle to detect manually. And often with and often it brings greater speed and accuracy. It can minimize financial losses and strengthens the integrity of the insurance system itself. However, it can also increase operational sensitivity when detecting false positives. It can directly affect legitimate customers. And at enterprise scale, even low false positive rates can overwhelm investigation teams and damage customer trust. Hence, the use of AI at a scale in fraud detection requires carefully designed review mechanisms, escalation workflows, and human oversight structures. Customer servicing and policy administration are next areas which are increasingly influenced by the use of AI. Conversational AI systems can now support policy inquiries, claim status, servicing requests, renewal reminders, and intelligent customer routing. AI can also assist service representatives through knowledge retrieval and next best action recommendations. In policy administration workflows, AI supports endorsement processing, document classification, workflow routing, and renewal automation. Scaling of AI into these workflows can bring huge benefits to the insurance companies. Today, a number of commercial PNC carriers are leveraging always on multilingual GenAI powered intelligent assistants across various channels to address risk appetite and customer queries. These bots summarize key exposures, generates insights from cited sources and databases, and simplify back office operations and claims management. However, customer facing AI systems can create trust issues if deployed without governance controls. Generative AI systems may produce inaccurate policy explanations, misleading service responses, or incorrect coverage interpretations. Hence, scaling of customer facing AI systems must meet same standards of accuracy, accountability, and auditability expected from human agents. One of the most important message here is that enterprise AI scaling fundamentally changes the economics of deployment. Pilots are operated with limited scope and dedicated resources, whereas enterprise scale AI introduces governance overhead, monitoring requirements, integration costs, legacy system remediation, and operational redesign complexity. ROI of scaling AI enterprise wide is real, but it arrives on a different timeline and through a broader set of value dimensions than the pilot business cases typically suggest. AI scaling is therefore not simply a technology deployment exercise. It is an enterprise infrastructure decision requiring investment in data architecture, governance systems, integration layers, model management, monitoring structures, and workflow accountability. Successful AI scalability in the insurance operations hinges on a strategic and holistic approach that addresses technological, organizational, and cultural aspects. Moving beyond isolated pilots to enterprise wide integration requires careful consideration of several key areas. In the next few slides, I will take you through them. The first and foremost point is to focus on readiness, infrastructural readiness, and organizational readiness. Scaling of AI requires a robust and modern technological foundation. It includes having data architecture capable of handling large volumes of high quality data, as well as the necessary computational resources. Many insurance companies still operate on legacy systems that are not compatible with modern data architectures. This leads to fragmented data and hindering real time integration. So, we would advise to build a modular AI ready architecture with reusable components, data pipelines, microservices, and monitoring dashboards. It also involves having the infrastructure to test AI solutions in production like environments to evaluate performance before broader rollout. The next is organizational readiness. Scaling of AI demands a significant shift in organizational mindset and structure. It requires aligning business, operations, and IT around a shared vision of AI. The teams should foster a culture that embraces change and accountability and can break down internal silos. This includes defining new roles such as AI product owners, model operators, and establishing cross functional teams that can collaborate effectively. It will also require a clear leadership that can emphasize on the link between AI adoption and overall business priorities. Next are effective data management and robust governance. AI models are only as good as the data they are trained on. Insurers often face challenges with data quality, accessibility, and fragmentation across various systems. Make sure clean, timely, and high trust data is available for AI workflows. Have processes for data ingestion, training, versioning, and accessing AI models, as well as managing transaction history. Standardizing data transfer capabilities and adhering to data standards across operations are critical for unifying and leveraging data effectively. Establish clear data governance policies that should include defining data lineage, quality standards, and access permissions. For AI governance, the governance should extend to model risk, fairness, privacy, interpretability, and regulatory compliance. Addressing these questions early prevents projects from being blocked later due to concerns about bias or exclusion of customers or regulatory scrutiny. The insurance companies must establish governance structure capable of ensuring fairness, accountability, compliance, transparency, and security across all AI enabled workflows. Governance must be embedded into deployment approvals, monitoring procedures, validation frameworks, and operational processes. While AI can automate and enhance decision making, the human in the loop approach remains vital. AI can provide data driven insights and even make autonomous decisions in well defined low risk scenarios. For example, AI can automate initial claims triage or provide real time pricing based on a driver's behavior. The goal is to leverage AI for efficiency and consistency wherever it's appropriate. When it comes to complex, high stake decisions, human oversight and intervention are crucial. This involves human agents reviewing AI outputs for accuracy, ensuring ethical considerations are met, and applying empathy and judgment that AI currently lacks. The human in the loop model also facilitates continuous learning and refinement of AI models through human feedback. The focus should be on how humans and machines can work together to meet customer needs, with AI augmenting human capabilities rather than fully replacing them. As AI systems scale across enterprise operations, security, privacy, and compliance alignments become increasingly important. AI systems process highly sensitive financial, behavioral, and health related data. This creates operational risks related to model manipulation, data poisoning, and adversarial attacks. Hence, AI governance must integrate directly into enterprise information security and risk management programs. Finally, enterprise architecture and cross functional alignment would determine whether AI scaling is sustainable. Many insurers initially deploy AI in fragmented business units with disconnected tools, vendors, and governance approaches. However, when it comes to enterprise wide AI scaling, it would require coordinated architecture, centralized governance, and cross functional operating models involving business units, compliance teams, technology groups, risk functions, and executive leadership. So, what issues can come when scaling? What can cause a project stall or completely fail? We all know that despite the immense potential of AI in insurance, the journey from successful pilot to enterprise wide scalability is not without challenges. Many AI projects, even those with promising initial results, can stall or completely fail due to combination of technological, organizational, and cultural hurdles. Understanding these potential pitfalls is crucial for proactive mitigation. The biggest hurdles are technological. They come in the form of inadequate quality of data, legacy systems, and workflow fragility. Insurers often underestimate the complexity of preparing data for AI. Data is frequently siloed, inconsistent, or of insufficient quality, making it difficult to feed clean, timely, and high trust data into AI workflows. The concept of data in motion, processes around training, versioning, assessing AI models, and transaction history, is often overlooked. Historical data may also exist in inconsistent formats across multiple systems, making enterprise scale AI deployment significantly more difficult than pilot environments suggest. Add to that, most carriers still has outdated legacy systems that are not designed for real-time machine learning or seamless integration with modern AI solutions. Connecting AI systems to fragmented policy administration, claims, and servicing platforms require extensive integration work. It includes middleware layers, API development, and data transformation pipelines. This creates significant integration challenges, slowing down AI scaling efforts. Another issue can be heavily manual processes and lack of standardized data transfer capabilities. It prevents the smooth flow of information required for scalable AI. Another common issue is launching numerous disconnected AI pilots, for example, chatbots, fraud detection, claim triage, without any clear strategy for integrating them into broader business domains. This leads to pilot purgatory, where promising technologies fail to deliver enterprise wide value because they are not integrated into core business processes. These fragmented efforts often stalls domain scale transformation. Organizational hurdles come in form of operating models, culture, organizational resistance, talent gaps, and change management. A significant portion of AI scaling challenges stem from people, organizational issues, and processes. Claims handlers, underwriters, investigators, and servicing professionals. They may perceive AI as a threat to their expertise. This is especially true if communication and change management are poorly handled. The inherent ambiguity of AI driven insights, which often operate with probabilistic outcomes, can also clash with risk averse culture of insurance companies. A big challenge could be lack of strategic alignment. Leaders may fail to clearly link AI adoption to overall business priorities. This can lead to unclear expected values and a lack of stakeholder buy in. This can result in a failure to effectively redesign workflows and fail to maximize the impact of AI. The next on the list is siloed operations. Large enterprises often suffer from siloed teams and siloed functions. This prevents the cohesive implementation of full scale AI solutions. The fragmentation can lead to short term band aid solutions rather than end to end process reimagination. Next is talent shortages and lack of mindset shifts. This can pose a substantial challenge when scaling AI in insurance operations. Simply because it doesn't just require data scientists, it demands a mindset shift. It generates new roles such as AI product owners, AI model operators, and it demands agile collaboration between business and IT. Gaps in talent and an operating model that doesn't support rapid iteration and adoption can hinder progress. To combat these challenges, involve business teams early, establish AI literacy programs, and frame AI as augmentation rather than replacement. The last in the list of challenges is governance gaps. Insurance regulators globally are still evolving their AI governance frameworks. If questions around model risk, fairness, privacy, interpretability, and regulatory compliance are not addressed early in the development cycle, AI projects can stall. Because of the risk centric nature of the insurance business, it requires robust governance frameworks from day one. In such a situation, organizations face two simultaneous risks: delaying AI adoption until regulators become clearer, or deploying AI aggressively without sufficient governance controls. We believe at this time the insurers should adopt principle based governance frameworks, which are capable of operating under evolving regulatory conditions. While many insurers initially rely heavily on external vendors and insurtech platforms for their AI capabilities, We believe they must maintain operational ownership of AI systems and have internal governance capability to validate model behavior, explain outcomes, or monitor performance independently. The pilot to production transition remains one of the highest risk stage in any AI program. It's simply because production systems introduce inconsistent data quality, integration complexity, workflow interruptions, governance requirements, and operational variability. Many AI programs fail because organizations underestimate these production realities. The issues we covered here highlights that successful AI scaling is not merely a technological challenge but a complex undertaking that requires a comprehensive strategy addressing data, organizational structure, culture and governance. Failure to address any of these aspects can lead to significant delays. It can also lead to cost overruns or complete abandonment of promising AI initiatives. In spite of all these challenges, I would like to emphasize that these challenges do not mean AI scaling is not possible. It simply means enterprise AI must be treated as a transformation discipline rather than a standalone technology experiment. As I mentioned, scaling AI to your enterprise wide operations is challenging, but it's not impossible. And some insurance companies are already doing that. In this section, I would like to draw your attention to what are they doing differently for successful scaling of their AI projects. Most of the successful AI projects adopt a strategic, multifaceted approach. This involves not only addressing technological hurdles but also fostering a supportive organizational culture and robust governance frameworks. One of the most common mistakes insurance companies make is scaling AI through technology platforms rather than operational workflows. Successful projects begin with a specific workflow, establish measurable business outcomes, deploy AI gradually, monitor performance, and then expand systematically to adjacent workflows. Instead of scattering efforts across numerous disconnected pilots, you should identify and prioritize a few strategic domains like claims automation, underwriting, distribution channel augmentation, etc., where AI can deliver the most significant business value. For each chosen domain, it's crucial to define upfront what specific business matrices will improve. Example, expense ratio, new business conversion, retention uplift, etc. This clarity forces prioritization and ensures that AI initiatives are directly led to measurable business outcomes rather than being seen as mere technological experiment. Next in the list is building a modular AI ready architecture. Successful AI scaling is not about deploying monolithic models, but rather about creating a foundation of reusable components. This includes developing robust data pipelines, microservices, workflow engines, and monitoring dashboards. Designing with reusability in mind allows for plug-in modules, versioning, experiment sandboxes, and government hooks. This can facilitate the deployment of AI across various domains. And such modular approach also helps in integrating new AI systems seamlessly with existing technologies. Scaling AI projects also requires a shift in operating model and a product centric mindset. AI should be treated as a product that evolves through continuous iterations rather than a one off project. This requires establishing cross functional squads comprising business, data, IT, and compliance experts, operating together with agility. Change management should be paramount. Employees, such as underwriters, must trust, understand, and adopt AI tools for them to be effective. Defining roles like AI product owner, model owner, and business champion, and creating incentives for adoption are critical for embedding AI into fabric of daily operations. Insurance companies that scale AI successfully often invest significantly more in talent, change management, and measurement. The most significant of all strategies is governance first deployment. Design adoption, trust, and risk controls from day one. Governance and compliance should not be an afterthought, but rather an integral part of the AI development lifecycle, right from the very beginning. This includes establishing comprehensive data governance, model governance, and ethical guardrails. Guidelines for operational monitoring for performance drift, cost benefit analysis, and adherence to responsible AI guidelines are also essential. Establish these frameworks before expanding AI portfolios across the enterprise. Governance structures should include cross functional steering committees, model risk policies, AI use case registries, and formal ethics and fairness review processes. Addressing regulatory readiness early ensures that AI initiatives comply with evolving industrial and geographical regulations. This prevents potential roadblocks to scaling. Building trust through transparent and explainable AI models is crucial for user adoption and regulatory acceptance. Next should be focus on value metrics. Learn fast and scale smart. Effective KPI measurement is key to successful AI scaling. Insurers should move beyond focusing on the number of models built or model performance and instead concentrate on tangible business outcomes such as reduced claim severity, increased conversion rates, improved retention, etc. Successful enterprise AI programs measure operational efficiency, business outcomes, governance effectiveness, customer experience, and compliance impact simultaneously. I would like to stress that pilots should be viewed as learning opportunities to develop playbooks and establish clear criteria for scale escalation. It is critical to avoid full scale rollouts without clear pilot success and demonstrated reuse potential. The focus should be on continuous learning and adaptation, using insights from early implementations to refine strategies for broader deployment. Final point: human oversight structures remain essential even as AI maturity increases. Organizations should establish clear accountability mapping, override mechanisms, escalation procedures, and workload modeling to ensure AI supported workflows remain operationally manageable, sustainable, and profitable. This brings to the end of my presentation. Artificial intelligence is no longer a nascent technology for the insurance industry. It is a transformative force that is reshaping operations, driving innovation, and redefining competitive landscapes. While the promise of AI is immense, realizing its full potential hinges on the ability to effectively scale AI initiatives. This journey, though challenging, offers substantial returns on investment through enhanced efficiency, improved decision making, and superior customer experiences. Successful AI scalability demands a holistic strategy that includes technological readiness, robust data management and governance, a human centric approach to decision making, and a proactive stance towards potential pitfalls. Insurers must move beyond fragmented use cases to strategic domain transformations, building modular AI architectures and fostering an organizational culture that embraces change and continuous learning. Critically, governance, trust, and risk control must be embedded right from the beginning. Currently, the industry is at a critical point where AI adoption is no longer optional. It is required for sustained growth and competitiveness. We believe the insurance companies that scale AI successfully have one trait in common. They invest heavily in governance, data quality, change management, and operational redesign, as they do in models and technology infrastructure. They understand that the models are often the easiest part. The harder challenge is building the operational discipline, governance maturity, and organizational alignment. We believe that those who commit to this comprehensive approach will not only overcome the challenges but also can leverage AI to drive significant business impact and secure a sustainable competitive advantage. This brings me to the end of my webinar. In the next few slides, you can see our past webinars and our contact details. Thank you all for your time and see you in our next webinar.